Thank you, Hamza, for your kind words. I'm really happy of the fact that finally we are having first conference in Pakistan on fraud and financial crime. This would not have been possible with your support, Hamza, and Mahmood Saab's your support. Dear audience, in today's event, the key highlights are not only the topics which we will be covering today, revolving around AML, CFT, cyber investigations, digital forensic, as well as the regulatory view. But the speakers who will be actually sharing their insight as far as their experience is concerned, either from their roles as CEOs, chief operating officers, as well as lawyer, in-house legal counsels, and forensic accountant. My today talk will revolve around emerging trends in battle against fraud and financial crimes. I'll be covering actually 4 concepts in my presentation, where I'll be defining financial crime, the recent financial crime trends in banking sector. Then I'll move on with my presentation on a key element which has to be looked into is regarding the anti-fraud framework. And then I'll also discuss from my own experience the gaps which I've seen in Pakistan market in the fraud and misconduct framework as far as the prevention, detection, and response strategies are concerned. And then finally, I'll just touch base upon a new concept which is globally being evolving at the moment, is to manage the risk of bribery through a new standard, just like ISO 9001 or 9002. Now there is a bribery standard which we call ISO 37001. In order to summarize, financial crime can refer to any non-violent crime that generally result a financial loss, including financial fraud. It also includes a range of illegal activities such as money laundering and tax evasion. Moving on to the definition of money laundering, the concealment of the origin of illegally obtained money, typically by means of transfers involving foreign banks or legitimate businesses, from legitimate business. Typically, it involves the following 3 steps. First, it has to be placement. Then you do layering of that particular money, and then you integrate it to buy some assets, either for yourself or in the name of your family or something like that. Now, if I need to just split what financial crime examples would be, that can be economic sanctions, money laundering and terrorism financing, fraud, for example, card fraud, mortgage fraud, check frauds, market abuse and insider trading, which we'll be discussing today as well, tax evasion, bribery and corruption, cybercrime and identity theft, embezzlement, scam or confidence tricks, and forgery and counterfeiting. Now, defining fraud and misconduct. I always combine these 2 words together, and I'll tell you the reason behind it. Fraud is a criminal deception, a person or thing that is not what it pretends to be. A misconduct is an unacceptable or improper behavior. We only talk about fraud, but the important element I would like to highlight here is you cannot even have any policies and procedures in the company. You may not have any written manual. The only line of defense, once you are actually doing a fraud investigation, if nothing is available in a company, the document which we should refer to is the code of conduct of the company, because it should clearly define what fraud, dishonesty means. Because if you don't have any line of defense available, at the end of the day, that document actually serves a baseline of argument in terms of any fraud investigation. So need to consider both these 2 elements together and in any fraud investigation. I did not want to go into any legal definition, but the legal definition of fraud may vary from country to country. But the key elements include dishonesty, deception, intention of obtaining an undue benefit, avoiding an obligation, misrepresenting the financial position or affairs of an entity. If I touch base upon some of the global financial crime trends, which you have seen even in the video that 321 billion was being lost in terms of the financial crime, These are some of the examples of the financial institutions who are being fined for financial crimes, may it be Chartered, BNB, you have Credit Suisse as well, Bank of Tokyo, Mitsubishi as well. So that actually costed 3.2 billion in fines as far as the financial crime is concerned. What are the recent trends which are happening in the banking sector in financial crime? Regulator fines and public scrutiny continue to increase, leading to severe reputational damage. In order to understand the business complexity and details, focus on business risk assessment are highly in the agenda in order to define a pragmatic risk-based approach and to develop de-risking strategies. Corresponding banking relationships have been greatly affected in various jurisdictions as part of de-risking. Focus on client due diligence and transaction monitoring. High-risk individual organizations, PEPs, continue to be the focus. Trade finance continue to be highly lucrative but heavily monitored by banks due to high risk for money laundering, terrorist financing, and sanctions. Intelligence and technology have been a key driver for investment in compliance from global banks in order to detect, monitor, and report financial crimes. Leading banks are establishing internal financial crime intelligence units with a strong data analytics focus and with experienced subject matter experts in order to have a proactive and flexible approach to mitigating financial crime risk. By implementing financial intelligence unit, this also allows leading banks to establish factors for process-driven review in order to implement robotics and machine learning techniques on these factories. I touched base upon de-risking in global institution. I thought of defining it for the audience who are maybe not be from the banking sector. De-risking refers to financial institution exiting relationships and closing the accounts of clients or groups of clients considered high risk. There is an observed trend towards de-risking of corresponding banking relationships from countries perceived as high risk. I just have bring in some global perspective on that. Keeping individual and business in regulated financial system is a precondition for effective system to mitigate risk and combat financial crime. Turning away customer could actually reduce transparency in the system by forcing transaction to unregulated channels, the World Bank. It is sort of understandable that people working in banks find it easier to say no rather than go through a process of understanding the intent and rules involved in a transaction. That, of course, is unless the customer is wealthy and the transaction is significant. Previous FATF CEO. Now moving on to the fraud risk framework, I normally give a fraud risk iceberg example. Imagine an organization fraud risk as an iceberg. The visible tip of the iceberg represents the fraud and misconduct that is identified, and the rest is hidden beneath the surface. Most of us are not interested in terms of looking up to the things which lies beneath the surface. If you intend to go to that extent, obviously each organization needs to have a comprehensive anti-fraud risk framework. The key challenges is to develop a comprehensive framework revolving around 3 pillars on prevention, detection, and response to a fraud event. When I call prevention, you need to have a code of conduct, you need to have an anti-fraud policy, you need to perform fraud risk assessment. When I come to detection, you need to have a whistleblowing policy, you have to have auditing and monitoring procedures, you need to have proactive forensic data analytics, as well as the response, where we may lack in most of the cases in terms of our fraud response plan, in terms of securing evidence procedures, etc. I'll briefly quickly touch base upon some of the key gaps which I've seen in the prevention strategies at clients. They do not perform ethical risk assessment. They do not circulate code of conduct in the local language. Pre- and vendor due diligence procedures are lacking. Right to audit clauses are not there in third-party contract with your distributors and suppliers. Ethics trainings are not provided. Pre- and post-employment screenings are not being done. Fraud risk assessment has not been done. There is no anti-fraud policy, and there is no communication of the fraud policy if even any policy exists. In terms of the detection, companies do have an internally managed hotlines, but people are more comfortable in terms of reporting their concern through a hotline which is independently being managed rather than being managed internally. Mechanism for conflict of interest declaration is not there. We get it in conflict of interest declaration signed at the beginning of the employment, but we don't have any mechanism in place to do it on an annual basis. We don't perform surprise fraud audits. We don't have documented investigation methodologies. We don't have trail of previous investigations conducted, and then where the bug lies. There's no segregation between internal audit teams and the teams conducting the investigation. The similar people do internal audit of the same area, and then they do investigation of the similar area. Then we have pre-exit digital forensic. My friend Dan Friedman will touch base on digital forensic, but when we call digital forensic, it's actually analyzing an individual machine who is actually either resigning from an entity just to see the activities over the past 2 to 3 months, to just see any proprietary or intellectual property theft cases are not evident in those kind of reviews. On the response side, we do not use forensic technology in terms of investigating an event. We only rely on reviewing hard copy documentation, but we don't take any analysis from the systems and mobile phones of individuals in a financial crime or a fraud incidents. Then we have to have a remediation action protocol when an investigation or fraud event actually takes place in an entity. Last but not the least is a standard to address bribery and corruption, which is ISO 37001. ISO 37001 is an international standard designed for the implementation of policies, procedures, and controls which are reasonable and proportionate according to the bribery risk your organization faces. What does ISO 37001 addresses? Bribery in the private, public, and non-profit sectors, bribery by the organization, bribery by the personnel acting on behalf of the organization or for its benefit, bribery by the organization's business associates acting on behalf of the organization or for its benefit, bribery of the organization. The first one was bribery by the organization, bribery of the organization, bribery of the organization's personnel in relation to the organization activities, and direct and indirect bribery, a bribe accepted or offered through a third party. What does ISO 37001 requires? Top management and those charged with governance table an active role in the implementation and ongoing maintenance of the system. Bribery risk by third parties are adequately assessed and appropriately addressed. Appropriate anti-bribery corruption controls. Effective and secure mechanism for raising concern regarding bribery. The organization is able to respond appropriately to the violation part. The effectiveness of the system in monitoring any bribery risk. Although ISO 37001 is cannot provide assurance that no bribery has occurred, but actually it just provides the guidance for companies to prevent bribery and corruption in their organization. At the end, I would like to emphasize the fact that you cannot eliminate the risk of fraud from any organization, but having a robust prevention, detection, and response framework, you can at least mitigate the risk of fraud and prevent your organization to be a victim against fraudsters. Thank you very much.